Good morning and welcome to the weekly technical analysis overview with Warren Peacock. My name is Dinella and I trust you had a lovely weekend. Before we begin, I just want to make sure everyone can hear me. So if you can, please could you lift your digital hand? Okay, great. Warren, good morning and over to you.
Good morning, Danae. Thank you. Good morning, everyone. Starting out with the J200, the top 40 index. Last week, Tuesday, we were quite excited to see new all-time highs. So we can see
Hi, Warren.
over the next couple of years.
Sorry, you disappeared for a few seconds there.
Oh, really?
Yeah.
Probably the internet again.
Okay.
Okay, so can you hear me now?
Yes, I can.
Okay. So basically, we saw the J200 breaking above resistance. It's now pulled back below that resistance, didn't offer any support, and we're basically back into the consolidation. We'll just have to see what the market does from here on. The market's open now. The futures market is open now. So we're going to have a look at the futures shortly. On the share front, I don't see any new trades. There's nothing really jumping out at me as a buying opportunity. But let's go and have a look at some of the stocks we've been watching. So Woolies still looking pretty decent. Looks like that Morning Star is really playing out from, if you look at the long-term chart, you can see it found support in the old historical support area. So we've seen that nice bounce off that. And it looks ready to continue. So we'll just see if the trend actually does change, where the 21 crosses above the 89. I'll be quite happy to add some more Woolies into the portfolio. Off to Netcare. Netcare came back and has now formed what looks like a decent bottom just at the stop loss level. So they're at the 24 Rand mark. So I'm just going to hold Netcare, see what happens. It looks like it's building a nice base here, and a break then above the 25.70 level, maybe even the high here, 26. If it breaks above that, then that's another buying opportunity. Or if you're a little bit more cautious, then you can either wait for the resistance break at 27.44.45 or 21 crossing above 89 on the daily EMAs. Aspen still in consolidation, not much to talk about there. It's still holding on that support level, just around that 270 mark. So nothing to talk about. Old Mutual broke really nicely and went through that long-term daily trend line, so that longer one there from end of 2015. It broke above it and is now sitting on Friday, closed back below that trend line, but still above support, which is the old resistance level, just straddling the 34 mark. And again, it's a longer term trade, so don't want to be rushing in and out of these things. So for now, Old Mutual still a hold. Vodacom, similar. Most of the stocks took a bit of a knock from Thursday, Friday last week. So we can see Vodacom still holding on to a good trend here. It's above those interim resistance levels and new all-time highs above the 185 mark. That trend is still in play, so still a hold on Vodacom. Mr. Price is still flirting with that 180 level. I'd like to see it breaking above that so that we can add some more the portfolio. Of course, we've got consumer spending numbers up, so that's only these retailers putting on a little bit of burst of energy there. Investec, still in that little upward consolidation. So Investec still kind of just dawdling along here. But as long as that trend remains up, stop loss remains at the below 90 Rand, and for now Investec still holding on to a bit of an uptrend. Capitec, new all-time highs again, and then we just saw Thursday, Friday down at the 850 mark. Just that little interim resistance sitting there. I've just got a little zone, and the reason is for the shooting star pattern. There's a shooting star there, so a break above that would be another potential breakout trade. Or if we see Capitec coming back to the previous important resistance, which can offer future support at 811. This bearish engulfing could also offer some support. If it does get down there, we'll see what happens. But for now, a break above 880 might be another small entry point. Coronation, again, that's still in that long-term consolidation. It's still holding on to the trade, so yeah, nothing to talk about. It's just in that consolidation, and wait and see if it actually above 80 rand. But for now, that is a whole in it, so it's around the middle point. You don't want to rush in at the middle. Like to get in maybe back down below that 64 mark, so say 62, 63 rand a share. Richemont also broke previous resistance and is now back below it. A lot of the stocks have done that, but that trend is still pretty strong, and I'm still happy to just hold on to Richemont. And then we've got BTI. I'm going to close BTI. It came back, went above that old support, becomes new resistance. It moved above it last week and has since closed back below the stop loss level. So for me, that's going to be an exit. The trend has also changed to down. I just think, obviously, the investigation into their practices probably put some pressure on the share price, so I'd rather just close it out and wait for the next trading opportunity. Let's go and have a look at some of the intraday stuff. Starting with dollar rand, that triangle still in play. Just found resistance last week. So dollar rand moved through, broke it intraday, broke through the resistance levels, but really respecting it, and now dollar rand coming off. So we've seen a little bit of rand strength at this high, but obviously this chart, very confusing chart at the moment. Don't want to make any rushed decisions. We look at the open today. So we gapped up at the open on this hourly chart on the Aussie future, and we can see there's the top of the gap. It hasn't quite closed that gap yet. I'm just going to put a line in there. Let's just put it on the gap. Trend is still down on the shorter term. Longer term trend has changed as well. But, this little gap up, we'll see what happens. Stop loss would be above the gap. So if it does close for an hourly candle above the gap, then I'll just close out the shorts. But for now, trend is still down. I still expect further downside, especially after that the false breakout to the upside. We saw the new highs come in, and the market just couldn't hold on to that. So I think this is going to be, it might be a little bit of a difficult sort of trading period now after that failed break. But let's just see how it happens. For now, we've got this little gap today. So between that high last week Friday and then this morning's open, so that still has potential to close, but I'd like to see it closing this gap here. Would be a breakaway gap. Closes that without closing above resistance, I'd be happy to just keep holding the shorts. And we look at the Dow that also came off last week, and it's since bounced. It's just bouncing off the 21 EMA. Trend is still really strong. So if if anyone's long on the Dow, that looks like a hold for now on the dailies, and looking pretty steady. Have a look at gold. Gold is now has potential to just test that resistance level. If I put my resistance line back in there, just didn't quite touch it last week. I'd like to see it touch that, and then maybe there's an opportunity to short it if I get a candle pattern. But for now, the trend is unimportant. We're in consolidation, so I'd like to see a break above that 1295, 1296 level before buying into a gold rally. And we can see that there's plenty of resistance going on. Again, I just want to be patient and wait for the trade to come to me. Then a quick look at Brent. Same as gold, consolidating, nothing to talk about really. And then we've got a small consolidation after a rally in Brent, but trend has changed. And again, long-term consolidation, these moving averages become unreliable. I'd need some better signal than that to get involved with Brent. So at this moment, I would expect it to probably head back to the 57 mark, but there are two resistance levels to get through before that. So yeah, the next one would be about around $55 a barrel, and then just below the current highs at 56.60. On to the currency side, pound yen, I'm still net bullish on the pound, but according to my matrix, the pound is still on the weaker side. So pound trades are just being done with smaller position sizes, just to mitigate the potential risks. Even we can put in a trend line there, and we can see that pound yen is broken below that trend line. Let me just straighten it out quickly. Just pull it down there, and we can see it did the little break last week, currently back in. So the market is not wanting to sell pound nor buy pound. It's just swinging around, and we'll have to see what happens. And then, of course, the yen is one of the it's still one of the medium strength, so it's still in the middle range. But the dollar is still weak. So dollar's got a score of 0 on my matrix, and it's just pretty weak. We saw dollar yen crossing about 2 weeks ago to the downside, but again in consolidation. So I'm waiting to see. It tried to break that little interim support level last week. It couldn't hold below that level. So I'm waiting now that it'll go back, test the 89, or it's going to come down and break support. And then I'll just have to take a breakout trade on it. So pound dollar, dollar being weakest, pound not being very strong, means that this trade is always going to be difficult. And we can see it's got a lot of swings, a lot of indecision. Market doesn't quite know what to do. And I'm just holding on to my £3 trades, pound dollar trades. Just wait and see. Trend is still in play. It has pulled above resistance. Now it looks like it's potentially a false break, and it's done it for the second time now, come back below that important level at 1302. So I'm just going to see what happens here. Then just a last look at the US dollar to the CAD. So US dollar to Canadian dollar, pretty much inverse correlation to the Brent price. And I'm just going to draw in a little channel. So I have a channel there. It's not a great channel by any stretch of the imagination. I'm just going to take a parallel and stick it across those 2 wicks. It's not a great channel, but it has broken below that. That channel will be negated if it breaks above the bearish engulfing pattern there, and that offers interim resistance. So for now, I've added another short into dollar CAD. Again, small positions, because it's not a great bear flag or anything like that. It was just a small little retracement channel with a stop loss above that bearish engulfing resistance at 127.49. Thank you, Danae. Thank you, everyone. Trade safely, and chat again next week, Monday.
Thank you, Warren, and to everyone, have a lovely week, and we'll see you again next week. Thanks, Warren.
Thank you. Bye-bye.